What's up everyone, and welcome back to Explain the Charts. Today, on September 30th, 2025, we are diving deep into Apple, ticker symbol Apple. There has been a tremendous amount of buzz around the stock lately, largely fueled by news of very strong early demand for the new iPhone 17. Multiple outlets reported a significant surge in Apple's stock price around September 22nd, directly correlating with this positive news and some fresh bullish analyst calls. However, it's not all one-sided. Some reports also point to cautious analyst checks and a generally negative news sentiment score for Apple compared to the rest of the tech sector. This creates a compelling backdrop of fundamental optimism clashing with some underlying market caution. So, let's turn to the charts to see what the price action is telling us and try to make sense of it all. Starting here on the daily chart, we can see the bigger picture for Apple over the past couple of years. The stock had a powerful run-up through 2024, setting an all-time high near the $260 level in late December before entering a correction. We saw a significant dip in early 2025 and then a very sharp sell-off in early April, which found a bottom around the $170 mark. Notice the massive volume spike on April 9th. That huge green candle marked a powerful reversal and likely a point of capitulation for sellers. Following that low, the stock began a steady recovery. Then, in mid-June, we saw a massive breakout with two enormous volume days on June 11th and 12th, launching the price from the $190s to over $213. This signaled a major shift in momentum and established a new higher trading range. The stock then consolidated for about a month before another major event occurred in early August. We can see a huge gap down on August 5th, where the price fell from around $220 to open below $200. This was likely a reaction to an earnings report, and it established a new key resistance area around the $220 to $230 zone. The stock then chopped around before retesting and failing at that resistance in late August. Now, let's zoom in on the more recent price action, starting from the beginning of September. The stock pulled back from that late August high of around $240, finding support near $226 on September 10th. This $226 level is now a key short-term support level to keep an eye on. From there, the price began to grind back up before the explosive move on September 19th and especially the 22nd. This is where the iPhone 17 news really acted as a catalyst, propelling the stock higher with immense volume. That move blasted through the previous resistance levels and pushed the price all the way to a recent high of over $257. Currently, the stock has pulled back slightly and is consolidating just below these recent highs, which is very constructive price action. This consolidation suggests the market is digesting the recent gains before deciding on the next direction. Switching over to the 1-hour chart, we can get a much clearer view of this recent consolidation phase. Here is the massive gap up on September 22nd that we discussed, fueled by the iPhone news. Since that peak around $257, the price has been trading in a relatively tight range, forming what looks like a bullish flag or pennant. We can identify clear intraday support in the $251 to $252 area. The resistance to break is that recent high just above $257. Notice how the volume has been tapering off during this consolidation, which is very typical. Traders are now watching for a spike in volume to signal a breakout from this pattern. For an even closer look, let's jump to the 15-minute chart to analyze the intraday action over the past few days. Here we can see the price coiling even tighter between September 26th and yesterday's session on the 29th. The price is being compressed into a narrow range, which often precedes a significant, volatile move. Yesterday, the key intraday support was found around the $253 level, with resistance capping the price near $255. A decisive break above $255 on this time frame could be an early signal for a push towards the major $257 resistance. Conversely, a break below $253 could see the price retest that larger support zone around $251 we saw on the hourly chart. This is the battleground for bulls and bears in the immediate short term. Alright, let's switch back to the daily chart to recap and look ahead. To summarize, the key price levels to watch are critical right now. The major ultimate resistance is the all-time high around $260. Closer by, the short-term resistance is the recent peak near $257. On the support side, we have immediate support in the $251 to $252 range. Below that, the prior resistance area around $238 to $240 should now act as a strong support level. Finally, the most important nearby support is the September low of $226. So, what are the potential scenarios? The bullish case is strong. The stock has a powerful news catalyst and is consolidating constructively after a huge move. A break above $257 on high volume would reinforce this bullishness, and a test of the $260 all-time high would become very likely. I would put the probability of this scenario happening at around 70%. The bearish case is that the good news is already fully priced in, and the stock will fail to break out. A rejection at the $257 resistance, followed by a break below the $251 support, would be the first warning sign for bears. This could lead to a deeper pullback towards the $238 to $240 support zone. I'd assign this a 30% probability, which would increase if we see a clear failure at resistance. Moving forward, keep a close eye on any new data regarding iPhone 17 sales and overall tech sector sentiment. Most importantly, watch for that volume confirmation on a break of the current consolidation range. That's our analysis for Apple today. If you found this breakdown helpful, please hit the like button and subscribe to explain the charts for more. As always, this is not financial advice, so please do your own research. Thanks for watching, and we'll see you in the next one.